Alright, gang, it's your boy Nature, aka Nature. Alright, so we're back for another video. Alright, so we just ran over Fibonacci retracements are not foolproof. Alright, so that's already explained. So in our next lesson, how to use Fibonacci retracement with support and resistance levels in Japanese candlesticks. Alright, so let's go, gang. Next lesson, how to use Fibonacci retracement with support and resistance in Japanese candlesticks. Alright, so gang, it's your boy Nature, aka Nature, gang. Alright, so how to use Fibonacci retracement with support and resistance. Like we said in the previous lessons, using Fibonacci levels can be very subjective. However, there are ways that you can help tilt your odds in your favor. While the Fibonacci retracement tool is extremely useful, it shouldn't be used all by its lonesomeness, okay, or by itself. It's kind of like comparing it to NBA legend Kobe Bryant. Kobe was the greatest basketball player of all time, but he couldn't win those titles by himself, okay? He needed some backup. Okay, pads just get the rebounds. Okay, similarity to the Fibonacci retracement tools. Okay, it's like the Kobe tool, okay? But the Fibonacci retracement tool should be used in combination with other tools, okay? In this lesson, let's take a look at what you have learned so far and try to combine them to help us spot some sweet trades setups. Already? Alright, so are you ready? Let's get this pip show on the road. Fibonacci retracement and support and resistance, okay? So one of the best way to use Fibonacci retracement tool is to spot potential support and resistance levels and see if it lines up with the Fibonacci retracement levels, okay? If Fibonacci retracement levels are already are already in support and resistance levels, and you combine them with other price areas, that's a lot of traders are watching. Okay, that a lot of traders are watching. This gives you a chance to this gives you a chance that prices will be bouncing from those areas are much higher. Okay, so if the Fibonacci levels are already lined up with the support and resistance levels, and you combine them with other price areas, this is a lot that, and you combine that along with the other price areas that a lot of traders are watching those Fibonacci and support levels, and this gives you a chance of price bouncing from those areas much higher. So let's look at the example of how you combine support and resistance levels with Fibonacci levels. Okay, below is a daily chart of the USD versus the Swiss. Okay, France. Okay, so let's take a look at this chart. This is for a uptrend. Okay, so for an uptrend, okay, we have a strong move up. Alright, for uptrend, we draw from the swing low to the swing high. Okay, then the Fibonacci levels are right here: 23.6, 32.82, 38.2, 50, 618, and 764. Okay, price will retrace back to one of these areas before resuming in an overall uptrend. Okay, so this is the theory. Okay, so it's a strong up move right now. We draw it from the swing high to the swing low to the swing high during the uptrend. Downtrend, swing high to swing low, uptrend, swing low to swing high. So swing low to swing high. So far, it retraced back to the 23.6 retracement level. Okay, so let's see what happens. All right. So as you can see, it's been in an uptrend recently. Okay, look at those green candles. Okay, a lot of green candles have been in an uptrend recently. You decide that you want to get in on long. You want to buy long on US CHF bandwagon. Okay, by this question, when do you enter? Okay, you bust out the Fibonacci retracement tool using a low at 1.0132 on January 11th for the swing low and a high at 1.0899 on February 19th for the swing high. Now you look at your chart, it looks pretty sweet with all those Fibonacci retracement levels. Okay, it looks pretty sweet. You look at your chart, everything looks lined up right. Alright, so where to enter though? Where to enter off of these Fibonacci retracement levels? Fibonacci retracement levels allow us to know where we can enter a trade to get in with the continuation of overall trend. All right, so As you can see, Fibonacci turns. We have a Fibonacci turns support at 1.0510. Okay, all right. It lines up perfectly with the 50 Fibonacci retracement level. Okay, we found a temporary resistance that turned into support at 1.0510. Okay, it was resistant. It turned to support. Resistance can turn to support, and support can turn to resistance. Okay, so it was a recent resistance that turned to support at 1.05110, which is at the 50 Fibonacci extension level. Okay, so this is how we accurately can decide, can see where price will head at next. Now that we have a framework to increase our probability of finding a solid entry, we can answer the question, where should we enter? You look a little bit and you see that the 1.05110 price was a good resistance level in the past, and now it just happens that it lined up, and that it just happened to line up perfectly with the 50.0 Fibonacci retracement level. Okay. Now that it's broken, it could turn into support. Once price breaks through this that 50 or that last resistance, and that resistance is now support. Okay, now that it's broken, it turns into support and could be a good place to buy. Okay, because we want to buy at the support level. Okay, one of these Fibonacci support levels. When price retrace back to one of these Fibonacci support levels, that's when we want to buy. All right, so let's see what happens right here. All right, so price eventually price broke through the former high and continues the uptrend. So let's see what happened though. It tested the support several times but couldn't break through. All right, so it did test the support. It did go back to the 50 level, that recent resistance, now support. It went back to that support level at the 50. It shot past the 38.2 level and went to the 50 level, retracement level before, and it touched it not once, not twice, but 3 times. 1, 2, 3 times before heading back up in an overall continuation uptrend. Okay, so eventually price breaks through as after testing the 50 Fibonacci retracement level. After testing that support, which this resistance is now support. It tested that several times, okay, before breaking through. Okay, eventually price breaks through and goes past the recent swing high and breaks even past that recent swing high and heads back up in continuation of uptrends. You would have got in at the 50 level. Okay, you would have got in for a great profit. Okay, for USD versus France. Okay, so if you did set an order somewhere around the 50 level, the fib level, you would have been pretty happy camper, a pretty happy trader. There would have been some pretty tense moments, especially on the second test of support level on April 1st. Okay, price will not only test that support level once, but it will test the Fibonacci, the 50 retracement level not once but twice, 3 times maybe, before price decides to break. So eventually, its second test, the second test of support level was on April 1st. Price tried to pierce through the support level the third time, but failed to close below it. Eventually, the pair broke past the swing high and resumed the uptrend. Okay, this is the swing high. Okay, swing low. This is the swing high. Okay, price eventually breaks through the swing high right here with this green bullish candlestick. Okay, it's very bullish. It's a green Marbosa candlestick or a white Marbosa candlestick, which is a very bullish candlestick, meaning that price wants to continue up. Once it breaks through the swing high, this is how you know that prices continue back in the uptrend. Okay, so it eventually breaks through the swing high. Eventually breaks through the swing high, and eventually the pair broke past the swing high and resumes in an uptrend. You can do the same setup on a downtrend as well. The point is you should look for price levels that seem to have been areas of interest in the past. If you think about it, there's a higher chance that price will bounce from these levels. Okay, so this was in the past. This was resistance that turned to support. Okay, then eventually, now that it's support, you we this is a way we can find support and resistance levels is by finding the last resistance that price went through. Once price breaks through this resistance level, it becomes support. It broke through the resistance level, that's now support. Okay, so it tested support a few times. Okay, you can do the same setup on a downtrend as well. It tests the support a few times. All right, which was resistance. It was resistance right here. This was resistance at one point. Once price broke through it, it finally broke through it. This becomes support. They tested support. It tested support about 3 times before breaking that level at 50. That 50 level, heading back up to the 32 and 20, breaking the 32, 38.2 level and the 23.6 level before heading back up, breaking past even the swing high. Okay, eventually broke past the swing high, and a new former high and continuation of uptrend has occurred. Okay, so you can do the same setup on a downtrend as well. The point is you should look for price levels that seem to have been areas of interest in the past. If you think about it, there's a higher chance that price will bounce from those levels again. Why? First, as we discussed in grade 1, previous support and resistance levels are usually good areas to buy or sell because other traders will also be eyeing these levels like a hawk. Okay, and we'll talk about that too, resistance and support levels, after we go over Fibonacci and RSI. Second, since we know that a lot of traders also use the Fibonacci retracement tool, they may be looking to jump in around these fib levels themselves. Okay, so this is how we so Fibonacci retracement levels are good because a lot of people that know how to use Fibonacci retracement tools are looking to jump in around those Fibonacci retracement tool levels as well. With traders looking at the same support and resistance levels, there's a good chance that there are a ton of orders at those price levels. While there's no guarantee that the price will bounce from those levels, at least you can be more confident about your trade. After all, there are strengths in numbers. Remember that trading is all about probability. If you stick to those higher probability trades, then there is a better chance of you coming out ahead in the long run. Alright, so gang, our next lesson we'll talk about how to use Fibonacci retracement with trend lines. Okay, this is how to use Fibonacci retracement with resistance and support levels. Alright, so gang, I hope this video helps. Your boy Nature, aka Nature, gang.